Did you know that between 1860 and 2014, 13 African countries endured a staggering 47 banking crises? Africa's economic story is often painted with broad strokes, but beneath the surface lies a complex tapestry of booms, busts, and remarkable resilience. This is African economics, visualized. We'll be diving into 150 years of data, uncovering hidden patterns and exploring the forces that have shaped the continent's economic trajectory. Our journey begins in the mid-19th century, a period marked by increasing European influence and the dawn of colonial rule. The Reinhardt-Rogoff dataset, tracking crises from 1860 onwards, reveals some surprising early events. For instance, Algeria experienced a debt crisis as early as the 1860s. But what many fail to realize is that this crisis predates Algerian independence. The seeds of future economic woes were often sown during this colonial era, with practices like France extracting over 200 million in indemnities from Algeria, creating early debt burdens. These weren't just financial transactions, they were the foundation for long-term economic dependencies. As the 20th century dawned, many African nations gained independence, inheriting not only political sovereignty but also the economic structures of their former colonizers. The dream of economic independence, however, was often hampered by external forces and internal challenges. The 1970s saw a surge in commodity prices, particularly for resources like copper. Zambia, for instance, experienced a copper boom, but this windfall masked a growing debt problem. By 1980, Zambia's debt had ballooned to $3 billion. When copper prices crashed in 1976, the country's economy plummeted, and GDP per capita fell by 30% between 1975 and 1990. This boom-and-bust cycle became a recurring theme, trapping many nations in a cycle of debt and dependence. The 1980s are often referred to as Africa's lost decade. Triggered by the 1979 oil shock and rising interest rates in the United States, many African countries found themselves drowning in debt. By 1990, the continent's external debt exceeded $500 billion. Countries like Côte d'Ivoire defaulted on their debt, seeking bailouts from the International Monetary Fund. Visualizations reveal that in the 1980s, roughly 70% of African countries were simultaneously in debt crises. The IMF's structural adjustment programs, designed to stabilize economies, often had unintended consequences. In Zambia, for example, the removal of subsidies led to a spike in unemployment. Critics argue that these programs, while aiming for fiscal responsibility, often exacerbated poverty and inequality. The story of Angola's oil wealth is a cautionary tale. From 2002 to 2014, Angola experienced rapid economic growth, fueled by oil exports. However, this wealth masked a darker reality. A 2014 audit revealed that $40 billion in funds were unaccounted for, highlighting the problem of elite capture and corruption that often accompanies resource wealth. This phenomenon, known as the resource curse, demonstrates how abundant natural resources can paradoxically hinder economic development. A significant portion of Africa's workforce operates in the informal economy. In sub-Saharan Africa, approximately 73% of employment is in own-account or family-run businesses. This means that even when there is economic growth, the benefits often don't trickle down to create wage-based jobs. It's been estimated that a 1% increase in GDP only leads to a 0.04% increase in wage employment. This highlights the structural challenges that prevent inclusive growth. Despite these challenges, Africa has shown remarkable resilience. Following the COVID-19 pandemic and the war in Ukraine, intra-African trade increased by 20% between 2021 and 2024. The African Continental Free Trade Area holds immense potential, with projections suggesting it could unlock $3.4 trillion by 2035. However, infrastructure gaps continue to raise trade costs, making them 50% higher than the global average. Today, African countries face a new set of challenges, including rising debt levels, climate change, and energy deficits. Debt service is consuming a significant portion of GDP, mirroring levels seen in the 1980s. Climate change is already causing billions of dollars in damages each year, while only 47% of Africans have access to reliable electricity. Addressing these challenges will require innovative solutions and sustainable development strategies. As we look to the future, it's clear that Africa's economic destiny lies in its own hands. The continent's young and growing population, coupled with its abundant natural resources, presents tremendous opportunities. However, realizing this potential will require addressing structural inequalities, promoting good governance, and investing in education and infrastructure. The data tells a story of both hardship and hope, a reminder that Africa's economic journey is far from over. What choices will shape that journey moving forward? The story of African economics is a human story, a story of adaptation, innovation, and the enduring pursuit of prosperity.